What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's Annie, Charlie and Ben with you this week. I'm back. Hello. Hello, gentlemen. How are you doing?
Very good. Great to have you back. Welcome back to the hosting seat.
Thank you. It's lovely to be back in Sydney after 3 weeks of being on the road for Better Business Summit and Better Business Awards, which have been really fun. So you're in Adelaide, Brisbane and Perth. And now we've got a week off for Easter this week.
Yeah.
I'm back at it again, but in Sydney next week. So it's actually really nice to be back on our home state again, be able to do some laundry, be able to catch up with you guys and do our normal work like this. Yeah. But of course, over the last few weeks, you guys have been super busy manning the fort with What's Making Headlines, doing all the news, doing podcasts. You've been doing a great job. But yeah, nicely back here and doing our day-to-day as usual, back in the routine. And again, another massive week of news.
News doesn't stop.
Obviously, we don't want it to stop. Otherwise, what would we do?
Albeit of the public holiday, despite it being a 4-day week, it's certainly felt a lot longer than that.
Yeah. I think that's true. There's been a lot going on. I mean, obviously, the big things this week have been around fuel security. We had Anthony Albanese on Wednesday night do an address to the nation, which kind of felt a bit underwhelming, I thought it was interesting that, interrupting live streams, like doing this whole thing, and then basically not a lot of information passed down. So I kind of almost feel like maybe there was a bit of backtracking from what they were going to announce, because it was basically saying, if you can use public transport, please do, and we've announced some things to help with fuel security. But yeah, I was surprised by that. Ben, what do you reckon?
Yeah, I mean, it probably wasn't as dramatic as reports kind of suggested during the day. I guess everyone's got visions of people going to their Easter holidays, loading up for petrol with jerry cans and that kind of thing. Yeah. So I think they just want to try and avoid that and try and keep everybody as calm as possible. But it is a tricky time for everyone, really.
Couldn't come at worse timing too. I'm going down to Wollongong for the weekend, so we're going to be petrol heavy. So you don't want to disrupt people's plans, but at the same time you don't want to kind of cut into reserves as well.
Well, there's the train line. If you can always get the train down to Wollongong. It's a lovely route actually down there. Some really nice to go down on the train from Sydney. Beautiful. But yes, I think like generally a lot of the commentary over the day before the address was announced in the evening on Wednesday night was basically saying there's going to be fuel limits, which is what the big concern was. And I thought that warrants a huge sort of public announcement on national TV across like multiple channels. I think it was more like, the interruption of normal programming has sort of surprised me that it wasn't a more large announcement. Yeah. It's kind of being like, enjoy your holidays, but please use public transport if you can.
Yeah.
But having said that, of course, over the course of this week as well, has been a lot of focus on fuel security as the conflict in the Middle East continues. We've been seeing a range of different announcements come out from the government on how they're going to be supporting people with fuel prices. So the fuel excise measures were announced this week. We've also seen some potential, hasn't yet been announced at the time of recording, but like some potential offerings to people who are in fuel heavy industries. Charlie, you've been covering some of this for us on The Advisor. What are some of the big takeaways for you?
Yeah, so what's been floated yesterday in anticipation of Anthony Albanese's press club address today, which is due in about an hour or so, is that he's another measure that the government will announce to alleviate pressure on kind of fuel-heavy dominant industries, that being offering interest-free loans to companies in these kind of logistics industries, whether it be, trucking or kind of supply chain companies, obviously copping a pretty big hit with these sudden spike in fuel costs. That'll be administered through the National Reconstruction Fund. It'll be $1 billion of interest-free loans that set to start within a fortnight, so mid-April, coming soon. A lot of these kind of announcements and policy measures are being kind of rolled out immediately. That being the fuel excise as well. You kind of saw retailers cost that into petrol prices before it even hit the market and hit kind of petrol coming on ships as well. So, yeah, that'll be announced by Prime Minister Albanese today. He's also going to talk up his budget,
of course,
as well.
Yeah.
It's set to be a pretty big ticket, I think, budget. There's a lot of talk about
I think a lot
ambition.
of the people in Treasury are having to rewrite the budget because, of course, what their intention was a few months ago before the Middle Eastern conflict really started, they're having to kind of scrap because, they're being like, well, now it's a very different environment, very different future we're looking at. And really, a lot of people thinking about fuel security here in Australia a bit as well, being like, should we be thinking more about protecting our own sort of reserves and having more domestic supply so we're not so reliant on other countries? And of course, we are already starting to see this come through with things like a surge in demand for electric vehicles, for example.
Yes.
I think there was some stats from the Commonwealth Bank today, or this week, sorry. And I think NAB also released some stats recently talking about a large uptick in demand, like in some cases doubling.
Yeah, the numbers are huge from CommBank. They've come out and given us updated statistics on kind of electric vehicle loan and also inquiries as well. And this data that showed since March 1, new loans for electric vehicles are up 161.5% compared to the weekly average volume recorded in February, obviously before this whole conflict started. And also inquiries are up 136%. And they're attributing all of this basically to the fuel crunch and the kind of supply issues that have sparked on from that. And also, we had NAB last week come out as well and give us some updated stats on their electric vehicle kind of loan take up. So NAB recorded a 100% increase in EV loans in March, while business-related EV inquiries rose by 88%. And a colleague on Broker Daily, Julian Barnes, wrote that story last week, and we'll obviously have the follow-up today. But it's a theme that's pretty uniform across all the major banks.
And I think as well, it's been one of those things that we know electric vehicle demand has been growing over probably the last 10 years, but particularly the last 5 years. There was a lot of fringe benefit tax incentives for people, not only with electric vehicles, but with hybrids as well. Some of the hybrid stuff was rolled back, but we're still seeing a lot of demand for electric vehicles here in Australia. And the argument, I think, historically has always been, well, Australia is not going to have a massive market for it because it's such a huge, vast continent. People can't drive as far on an electric vehicle. There aren't the right infrastructure in place for charging ports. But I think, to be honest, most people now are like, there's enough. We can deal with this. We just won't take our electric vehicle on a huge road trip, but for most of our sort of day-to-day driving we can. Ben, you've been writing in the past, I think for us on The Advisor, lots of different articles about the green loans and the green financing for electric vehicles. Generally, what's sort of the trends that you're seeing that are kind of driving it in market that you've been hearing from lenders and from brokers?
Yeah, we've seen sort of steadily increasing demand. I guess the big difference now is demand is increasing quite sharply. And it'll be interesting to see once we've got data in a few months where that stands. Are consumers and businesses still going to want to look for green car loans and green home loans and that kind of thing? So yeah, it should be interesting.
I think that 88% figure from NAB there as well, really interesting, seeing what businesses are wanting. And of course, this has been a lot of focus for the government and for sort of lenders more generally, has been how are we helping small businesses who are really going to be bearing the brunt of cost increases because of things like fuel, but also because of things like, the cost of goods that are manufactured using oils. So, plastic, for example, seeing a lot of increase in the cost of plastic, seeing a lot of increase in some of the food imports as well. So generally kind of being like, how are we affording anything and how are small businesses going to keep the lights on? And some of the support that's been announced from the government has been on really helping small businesses kind of navigate this period, as you talked about already, the interest-free loans, but also looking at, well, how are the lenders doing it? And many lenders have been sort of reaching out to small businesses already to say, if you are struggling, let us know. We can work on a repayment holiday. Then you've been doing some podcasts recently with small business lenders for The Advisor. What sort of things are they seeing as a result of the conflict?
Well, I had a really interesting one I recorded a couple of weeks ago with James Beeson, the CEO of EarlyPay. It's an invoice finance lender, and he was sort of talking about the interesting role brokers can play with their small business clients, kind of looking at how they can help their clients handle the rise in input costs. because he was really sort of talking about these businesses are kind of copying it in all directions. And it's not just the fuel crisis, it's things like payday super, rising energy costs and that kind of thing. So yeah, he had a lot of good advice in terms of the questions brokers can ask their clients as well, to sort of get a gauge of how they can offer solutions. Things like stress testing clients for different scenarios, such as what happens if you can't get stock for a while, what happens if consumer demand falls off and orders are less than they were before, how much equipment do you need for certain scenarios. So yeah, it's all sorts of opportunities to sort of be a holistic advisor for brokers at the moment for small businesses. And I think there'll be plenty of businesses who sort of need cash flow to work through challenges in the upcoming months. So.
Yeah, and I think this is a really sort of interesting time, at the end of financial year anyway, as we sort of approach the end of financial year, a lot of brokers will be talking to their SME clients about, how are they prepared for the end of financial year and the year ahead. But also looking now, I think at being like, if you don't have these cash reserves now, do something about it right now, because you don't want to wait until it's too late, and then it will be very hard for you to access finance and to be able to service that loan. So really ensuring that people are kind of thinking about the future and what it will look like if there is a prolonged conflict, but also if generally, they're kind of needing a little bit extra support in the next few months.
Yeah.
We're going to take a quick break here. When we come back, we'll be talking about what the next few months could look like, because we've had changing forecasts for what's going to potentially happen with the cash rate from some of the banks, which is not great news for those with a loan. And we'll get into that just after this. So this week, Charlie, we were talking quite a bit about the cash rate decision for March and what that meant. We had the RBA minutes come out, for example, but we also had a surprising change of forecast from Westpac's economist, Lucy Ellis.
Yes.
She came out this week and said, we think not only will there be another hike in May, but there will be 2 more after that, consecutive hikes for June and for August.
Yeah, not good news.
Not great. And that will take the cash rate to 4.85%. So they're talking about 25 basis point hikes. So we had one in March, obviously, just gone.
Yep.
We're going to have
February as well.
Sorry, in February, then March.
Back to back.
The next one's in May. So they're saying another one in May, and then the next one after that is in June.
5 back-to-back
another
hikes.
one, and then August. 5 back-to-back hikes is what they're forecasting. So taking us up to 4.85%. The last time the cash rate was that high was in the GFC. So in 2008, I think November 2008 was higher than that. It was in 5.25, I think. So looking at really, for the longest time, for decades, coming up to the highest cash rate we've seen, which obviously increase the cost of lending for everybody. This really has been because of the uncertainty with fuel, but also because of a lack of productivity. We've been seeing and talking about a lot here in Australia. The unemployment rate is still really low, so it's not like we can kind of improve productivity that way. So generally, not great economic conditions for an easing. No. But you'd think it's kind of a weird dichotomy. You'd think if things were getting more expensive, like fuel, that they'd want to be cutting rates to stop stifling the economy. But it seems that people are still spending quite a bit. Yeah,
I know. It's a double-edged sword, as well as you say, and growth isn't high, and it's expected to plateau, and Treasury's put out new growth forecasts as well. So they're balancing that as well and slowing the economy down. And that was kind of the entire justification of the split in the RBA meeting as well. Dissenting members didn't want to cause a downturn there.
Yeah.
But yeah, it is difficult, as you say, because interest rates and the cash rate doesn't directly correlate to fuel prices type of thing. But yeah, Westpac has broken from the pack here. They're the first to do it. All of the other 3 major banks, that being Commonwealth Bank, NAB and ANZ, are all still predicting one hike in May of 25 basis points and an extended period of holding. I think it'll be interesting to see if and then when the other banks revise their forecast, and if they do. We saw some kind of rate movement from ANZ yesterday. Interesting to see if that kind of is into their thinking on the back end of the economists there. But I don't know. I'm not exactly sure no one kind of knows for certain. But Westpac is basically attributing this to a mix of the whole global uncertainty and instability of the fuel shock, and these majors have all revised their inflation forecast too.
Yeah,
and that's all tipping 5% mid-year. I think Westpac's tipping 5.5%.
Yeah,
so that was last week when we got those February CPI numbers. They all came out and revised their inflation forecast as well.
Well, I think part of the reason that Westpac was saying they think the RBA will tighten more is because they think, well, actually the pricing behavior from a lot of these sort of fuel companies was surprising. They really passed on the price increases immediately. So they're like, we think that they'll kind of want to be tightening monetary policy a bit more by than they would have had to have done otherwise, because they're kind of seeing, well, you know, maybe to bring down inflation, they'll have to kind of sharpen. So it's sort of a bit like, well, you know, you're sort of damned if you do and you're damned if you don't.
Yeah, exactly.
But the other thing that Westpac, that Lucy Ellis said that I thought was really interesting, was that she now thinks the rate cutting cycle, the next rate cut cycle, will actually be later than initially expected. So not only are we going to have a stronger rate hiking cycle this time round, but then we're going to have a prolonged period of waiting after August, and then we won't start seeing cuts until 2028, which had been originally 2027.
Yeah,
so
27.
A couple of years of higher rates.
Yeah, they've pushed it out by a year, which is quite a while.
Yeah.
So,
I think it was a full complete year. I think it's around 6 months. Can't remember off the top of my head the actual month of the rate cycle forecast that she put out, but saying, it's going to be, you know, a couple of years of higher rates, which is not good news for first home buyers who want to get in market. Not great news for those with a loan already, particularly those under the first home guarantee schemes that might have a very high LVR.
Yes.
And like, you know, high repayment schedule and no savings left after that.
No.
So kind of not a huge amount of buffer to go on.
No.
So lots of people looking at, well, what does this mean for me? And brokers being very busy at the moment fielding calls from borrowers, not just on what does this mean for my existing loan, but people coming into market and being like, should I be looking at a fixed rate? What are the costs of these rates? So many people now looking quite quickly at, should I get a fixed rate now? Should I rate lock? Because of the changing dynamics. You know, as you said there, ANZ's already changed their fixed rate prices. Westpac, obviously, because of their renewed forecast, have changed theirs.
Yeah.
So people now being like, maybe I should pay a little fee to make sure I get this fee that I want.
Yeah, exactly.
To get the rate that I want. But you mentioned there the RBA minutes and the kind of the dissenting argument, because it was split this time round, which was pretty interesting, like 5-4. And you sort of said some of it was about people not wanting to have inflation worsen, really, or have kind of put the economy through tougher period than it needs to.
Yeah, exactly.
Was there anything that stood out to you about like what they were saying?
I think it was pretty clear cut, to be honest. Michelle Bullock in her press conference was quite transparent when she said we were all on the same page kind of conceptually, wherein we agree that inflation is too high and uncertainty is too elevated, but the difference was on timing. And that, you know, members that voted for the hike thought that there was enough data to go on before the kind of quarterly CPI figures. The dissent showed that, but revealed it more kind of extensively. That basically being that the 4 members that voted against the cash hike basically agreed that inflation was sticky, and that the conflict posed economic impacts on downturn risks, but they put more weight on the risk of tightening causing a sharper downturn.
Yep.
So they thought that if they went too soon, it was going to have a kind of undue hit on the economy, and they wanted to wait and see.
Yeah.
Wait and see what happened if the war wound down, if there was a ceasefire or the strait was going to open and oil was going to flow more freely, and if it was going to be a kind of short-lived conflict as well. So I'll read some quotes from the minutes, and they said that the 4 bloc that voted against the cash hike said broadly, the case to keep the cash rate target unchanged at the current meeting centred on concerns about the effect of heightened uncertainty on the outlook for the economy, particularly around the trajectory of domestic growth. They highlighted that, quote, the weaker than expected outcome for consumption in the December quarter has suggested some downside risk to the level of household spending in the March quarter. So I think these members were already kind of seeing a slowing in household kind of attitudes and spending attitudes. They were looking at that data more so, giving that more weight than, say, inflation, and then how that would maybe increase after a cash hike as well, and how spending would slow even further.
But there seems to be an consensus that rates are going to go one direction.
Yeah, so the banks were all
definitely up.
It's just a question of when.
Yeah, so there's not a lot of respite in there.
But there's still good rates to be had. I did actually see a couple of broker posts on socials this week where they were talking about still getting rates that start with 5.6. So kind of being like 5.5, 5.6. That's pretty good for right now. I'd say most advertised rates are currently around 5.8. So kind of seeing like, still some wiggle room for brokers who are working hard to get discounts for their borrowers.
Yeah, you really feel for people with weighty mortgages at the moment, particularly sort of people and we might go into this a little bit later, but people in the first home buyer segment who might have sort of felt pressure to get in as soon as possible and have found themselves in a situation where their repayments are quite a lot more than
they thought,
what they could be. And I guess this is probably one of the things you have to budget for when you're sort of signing the dotted line of a loan. But
well, this is also why we still have the buffer, so the 3% buffer on the advertised rate, so to make sure that borrowers can service. But of course, we're talking about the 5% deposit scheme here. They have to really put all of their savings towards the loan to service the loan. I think the lenders don't really want to, or the government doesn't want you to have a savings set aside for decorating this house. How dare you even think about wanting to buy furniture once you bought this house? But yeah, I mean, having actually a savings buffer, a lot of people want to have, but the way the scheme works is very flexible towards that. They kind of take all of your savings into account. So yes, if rates do go up another 3 times this year, then that's hundreds of people.
Yeah.
Really, hundreds of thousands of people probably in the long term actually being I don't have thousands of dollars extra to go towards this.
Yeah, and it's like the difference between being sort of technically able to afford it and it coming out of your wallet in your life, it's huge. So,
and I think this again is why it's so important to have a trusted advisor like a mortgage broker to talk about what does your life actually look like if you're making repayments at this level, because yes, technically you can afford it, but you're going to be eating beans. You can't go out to eat. You can't maybe you have to think about your kids' education. Are you putting them in private schooling? Maybe you have to take them out because you'll need to take that money back. So there's a lot of lifestyle changes that people kind of really need to be aware of. And I think this is the big thing about the scheme is being yes, it's great getting people into market, but can they actually afford to stay there with the structure they've got? We're going to take a quick break here. When we come back, we'll talk a bit more about the scheme because we've had some more information this week, both on the 5% deposit scheme and the Help to Buy, and we'll get into that just after this message. So the first one, let's start with Help to Buy, I suppose, because this is the shared equity scheme that is means tested that the government has, where they take about a 40% share in you buying a home. And up to this point, everyone apart from Tasmania had been involved. And when they actually first announced it, Tasmania basically were we don't really need to be a part of a scheme because we have our own similar one.
Yes.
And, we're kind of going to sit this one out. So we had the Queensland, New South Wales and Victoria all came on immediately. WA came on, I think, in January, Help to Buy, quite recently. And now, finally, Tasmania's joined the pack too. What was the go with Tassie taking so long?
Well, just as you said, they've got their My Home shared equity scheme incentive. So I think the aim with Tasmania holding out for a couple of months was them seeing the government kind of investigating how the two schemes would interact with each other and if there wouldn't be don't
want to undermine their own one.
Exactly. Or crossover. And they both they want both obviously to operate kind of effectively as well. So I think that was and that was not a mystery or anything, it was public knowledge. But yeah, it was announced on the 25th of March. The Housing and Planning Minister, Kerry Vincent, he introduced a legislation to enable the Help to Buy scheme to operate in Tasmania. So yeah, as you said, this will obviously allow Tasmanians to access these federal equity contributions either up to 40 or kind of 30% of existing properties. And then you've got income caps and price caps. I'll go into those. So the price caps for Tasmania will be 700,000 in capital cities and regional centres, and 500,000 everywhere else in the state. And the income thresholds will sit at 100,000 for singles and 160,000 for joint applicants and eligible single parents.
Even that, if you're on 100K and you're buying a 700K house, that's 7 times your income.
Yeah.
Like that's quite a big mortgage.
Yeah, I had to stop and think when I wrote that. I did the math in my head. But yeah, he said again that he basically said the delay in rolling out Help to Buy in the state was they didn't want to kind of make their My Home scheme obsolete or anything. And he framed it as a additional tool as opposed to a replacement for that scheme. And he said, now with the information needed to assess the impact of this scheme in Tasmania, we feel confident to move forward. The government is delivering greater housing options for Tasmanians.
Do you have any idea of when it will actually go live?
No, there wasn't any kind of details as to a date. I think they've tabled the legislation before Parliament. So the legislation, I believe, has passed Parliament, but again, there's no date or anything as of yet. That might be another announcement.
Well, the other thing that we're waiting for Help to Buy, aside from having the last remaining state come on board, is also being like, well, which lenders are on board? Because we still only have 2 lenders on the Help to Buy scheme panel.
Yes,
so
it's
Bank Australia and Commonwealth Bank of Australia.
Yeah.
So it's not a massive amount of choice.
No, it's not.
But also, of course, not amount, like if you've got loads, if these lenders have a load of applications, like how long is it taking for them to actually turn these loans around, get them approved? I actually haven't checked that, so maybe I should ask the question. But yeah, I think generally it's been like, when are we going to get some new lenders on this panel? Because it's been a while and 2 is not enough.
Yeah, and I spoke to a broker in Tasmania, a Hobart-based broker who's the CEO of Derwent Finance, Emmanuel Marios, and he said he echoed the exact same statement and concern you did, in the fact that broader broker concerns. I know you've written stories about this in WA as well. Rebroker concerns on the kind of the small group of participating lenders. And also the caps, the income caps that are being set kind of, or not income caps, the price kind of caps that are being set below market prices as well. Are a little bit kind of perturbed about that. So he said, if only a handful of lenders are accredited to participate, competition is limited and clients may not be accessing the most suitable product for their circumstances. So there's kind of more options out there, but the scheme doesn't allow it.
Well, the other scheme that the government has that we have been talking about already and has a lot more lenders, including recently ANZ, which finally came on board, is the 5% deposit scheme. We had some new stats come out this week from Housing Australia about success of the programme. Again, showing a huge amount of people being supported. How many people, Ben, have you kind of seen in the Housing Australia release about actually using this programme? Yeah,
so according to Housing Australia, more than 300,000 Australians are now using the recently expanded scheme. So our listeners will know previous income caps have been removed, price caps have been lifted, the sort of applicants have been broadened, applicant types have been broadened a little bit. But that's good since its launch in 2020, 300,000.
300,000. I think like the expanded scheme as well, because it removed the number of places. So it used to be, I think, 50,000 places a year, I believe, but it was still capped. And they kind of scrapped that and were like, however many you want, come along.
Yeah, and Housing Australia was saying 60,000 of these Australians are essential workers as well, and I think 90,000 in regional areas too. So I think it is going to some people who need access to that kind of housing as well. Yeah.
And I think that's the whole point of the program, isn't it? Is to really ensure that people who want to get into the market and need housing security, are able to, and particularly essential workers who, ridiculously enough, are paid probably the lowest, kind of, able to access the schemes. But as we said, now with the income limits removed, it kind of makes it more accessible for everyone. But of course, you still have to have the requisite savings. So 5% if you're purchasing not under the single parent scheme, or 2% if you're a single parent. So I think, like seeing a lot of different people in the regions as well, as you mentioned there, like buying. And I think that partly that's because of, again, like the price caps probably work a little bit more favorably in the regions than they do in the regional centers and the capitals, because they're still fairly low. But, you know, again, the big question every time we talk about this has been like, but where is this housing coming from? Because supply is still so tight. And Charlie, you were writing a story about an interesting report from S&P this week that looked at the efficacy of these schemes and the kind of pitfalls and the opportunities. What were the kind of takeaways for you?
Yeah, so it was interesting to delve into this. I had a good time writing this story, and we've had a couple of reports like this. We had one from the kind of IMF that touched on the 5% deposit scheme. We had one from PRD as well that was really extensive and looked at these home guarantee schemes over time and the impacts that they have on demand and supply. But this was from S&P Global Ratings. And the report was titled, Australia's expanded support for home buyers could backfire. So they kind of basically said that these higher price caps obviously meant that more dwellings qualified. Therefore, there was more kind of competition in the lower priced segments that sat under the threshold. And they basically said that they expected these values to keep climbing before hitting a ceiling and then plateauing. But more importantly, they kind of said that this extra demand in that segment was kind of consequently eroding affordability.
Yeah.
And putting more people under strain. I
think we saw
kind of underwriting the very like affordability gains that the whole program was designed to have.
Yeah. And I think we saw some stats from, was it Cotality? Either the end of last year or the beginning of this year, talking about that and saying that, you know, since the schemes come in, like the fastest accelerating house price groups have been those at the lower end, because it's really incentivizing people to come into market, therefore increasing demand, and therefore more people are able to buy, and therefore the prices of property keep going up. So it's kind of a vicious cycle where we're seeing, you know, these schemes meant to be helping people with housing affordability actually exacerbate the issue. I think that is really interesting, and it's such a hard one to fix.
It's crazy because it's a typical thing we sort of see where these schemes are very well intentioned, but then sort of practicality, there's that other issue on the side. And I guess whose responsibility is that to build all those extra houses that people need?
Exactly. Well, I think this is also why it was means tested to begin with, to be like, let's ensure that the right people are buying these houses. And, you know, we're not having this kind of dynamic where people are able to just put in an extra $10,000 on a bid because they're able to. Like, that's the whole point of having a means test, is to make sure that sort of it all works out. But anyway, I'm not there to make policy, and thank goodness for that. But so I think there was generally like really interesting to see these reports that are kind of being like, really, it's not going to be great for housing.
No, and again, like they basically said that, you know, this aid could price out first home buyers it aims to help. So I felt like that was a pretty stark quote, that the expanded scheme is, you know, could fuel demand to the point wherein it makes house prices unaffordable for that same cohort. So it's like that whole continuous circle, you know. And there were also some interesting takeaways on LMI and also kind of the LMI industry as it being squeezed as the kind of Commonwealth share grows, and then also how S&P concluded on risk and what they kind of their trajectory moving forward. So there was more to the story. So I encourage you to go and read it.
Check out
it was a pretty broad report that looked at a couple of things. So do go to the Advisor website and give it a read.
Well, before obviously we wrap up for the Easter holidays, we've got Friday and Monday as a national holiday, which is lovely for us. Get a little bit of 2 short weeks, but it does mean that we have to cram a lot of news into a short period. So please, if anyone has any major announcements, don't do it on Friday or Monday because we want to make sure we're covering it, but we'll be back on Tuesday. And of course, next week also we'll be continuing on with the Better Business Summit, which will be taking place in Sydney on the 9th of April here in the Hyatt Regency. So it's Thursday, the 9th of April. We've got the finalist breakfast in the morning. So if you're a finalist for the awards, we're doing a new thing this year where we're giving trophies to people who registered to come along. So if you are a finalist, do register. We'll try and get you a trophy, and you get like a health shot, and there's a DJ, and it's like great way to start your day. And we'll do like obviously photos with your finalist trophies as well. Then we have the summit from 9 till about 2:30, and again, really great content in here. It's all about scaling businesses using either AI or how major brokerages have been doing it, and also hearing how some amazing business tips from people like Maxine Horn, who is the founder of Vita Group, which was had Phone Zone as one of their companies, and she's now a Shark Tank shark. She's got an amazing session talking about what sort of things she's learned over her career and what she's seen from other businesses. And in Sydney, which is exclusive to Sydney, we have an former F1 chief operations officer and the former Richard Hopkins coming to talk about what sort of things the Formula One Red Bull team would do to kind of really ensure operational excellence. So how can you kind of emulate that pit stop crew, element, and kind of have a business that works seamlessly, that everyone knows what position they're doing, what role they're doing. And that will be so fascinating. I'm a bit of an F1 nut as well, so I'm really looking forward to that session. And then, of course, we've got the awards in the evening. So we actually get to crown the best of the best in New South Wales and ACT from the brokers and the lenders and aggregators that have come as finalists. It's going to be a massive awards. We've already sold out. I don't think I even have a seat at the awards. It's like we're kind of like just floating around. But yeah, there's a huge amount of interest this year. So thank you to everyone who's bought a ticket. And if you are so interested in coming to the Melbourne Awards, you can do. That's on the 16th of April at the Crown Towers in Melbourne. And again, we'll have the Better Business Summit during the day and the finalist trophy sort of presentation breakfast in the morning as well. So really looking forward to continuing on the roadshow. But I must admit, I am a little bit glad to have a week to recover and get back on the normal time zones, because I have no idea what time it is.
Only 2 more to go now, I suppose.
2 more, and the biggest ones. Yeah. So it's very exciting. But yeah, really looking forward to the Better Business Summit, Better Business Awards. If you haven't yet bought your tickets, make sure you do. There are still tickets for summits as well. And I would 100% encourage you to come along, because it's such great content and really great to have so many brokers in the room sharing ideas, making new friends, having a chat to us as well about, like what we're up to and, talking about the podcast. But yeah, if you do listen to this and you want to come along, please do come and say hello to us. We'll be there in Sydney. But yeah, otherwise, we hope you have a fab long weekend, and we'll catch you next time for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.